If you trade in the stock market, you may have recently heard a new term, CAS. But what exactly is CAS? And why was it introduced? And why does the stock market now have a special section near the end of the day? Does the CAS change the closing price? Can you place orders during CAS? And most importantly, what should a normal investor or trader know about it? Today I will explain the new closing auction section or CAS in very simple words. Let's begin. Chapter 1. What is CAS? CAS stands for Closing Auction Section. It is a special 20-minute section in the equity cash market used to determine the official closing price for stocks covered by the CAS framework. SEBI introduced CAS in a phased manner. Initially, it applies to cash market stocks on which derivative contracts are available. Other securities continue under the existing closing price method until they are brought into the CAS framework. The new CAS framework became effective from August 3, 2026. And Chapter 2. Why was CAS introduced? Before CAS, the closing price of stocks in the equity cash segment was generally determined using the VWAP of trades during the last 30 minutes of continuous trading. VWAP means volume weighted average price. In simple words, it considers the prices at which trades happened and the quantities traded. SEBI introduced CAS to move toward an auction-based closing price. The idea is to bring buy and sell interest together into one pool and discover a closing price that reflects the market's collective demand and supply. SEBI says CAS intended to provide a fairer and more transparent closing price, improve execution for large orders, and help passive funds transact at the closing price. And Chapter 3. What time does CAS happen? This is one of the most important things to remember. CAS runs from 3:15 pm to 3:35 pm. That's a total of 20 minutes. Let's divide into simple steps. 3:15 pm to 3:20 pm. This is a transaction reference price period. The market moves from continuous trading into the CAS process. 3:20 pm to 3:25 pm, orders can be entered for both market orders and limit orders. 3:25 pm to 3:30 pm, only limit orders can be entered. The order entry section closes randomly between 3:28 pm and 3:30 pm. This random closing is system driven. 3:30 pm to 3:35 pm. Now comes order matching. The exchange matches eligible buy and sell orders. The resulting prices become the official closing price for the stock. Chapter 4. What is an auction here? Don't think of an auction as someone standing with a hammer saying 500, 510, 520. That's not what happens. It's a computerized auction. Imagine buyers say, I wanted to buy a stock at 500, I wanted to buy at a 502, I wanted to buy at 505. Sellers say, I wanted to sell at 500, I wanted to sell at 503, and I wanted to sell at 505. The exchange collects this information. It then finds an equilibrium price and at which the maximum possible quantity can be matched subject to auction rules. That becomes the closing price. And Chapter 5. Simple example. Let's imagine a stock called ABC Limited. Before CAS, the stock is around 500. During the CAS auction, buyers place orders around 498, 500, 502, 505. Sellers place orders around 500, 502, 504. The exchange looks at all eligible orders. Suppose the auction determines that 502 is the price where the maximum quantity can be matched under the rules. Then 502 becomes the closing price. This does not mean the stock is worth exactly 502 forever. It simply becomes the official closing price for that trading day. Chapter 6. Does the CAS apply to every stock? No. This is very important. CAS was introduced in a phased manner. Initially, it applies to stocks in the equity cash segment for which derivative contracts are available. For the remaining securities, the closing price continues to be determined using the existing VWAP based method until they are brought under CAS. Chapter 7. What is the use of CAS? CAS has several intended benefits. First, better price discovery. Instead of relying on trades from only the last part of continuous trading, CAS brings many buy and sell orders together. This can help discover a closing price based on broader market interest. Second, more transparent closing price. The purpose is to make the closing price more representative of the market's collective demand and supply. Third, better for large orders. Large institutional investors can potentially execute closer to the official closing price. Fourth, helps index and fund calculation. Closing prices are very important for index calculations, derivative settlement, mutual fund NAV calculations, and other financial process. Chapter 8. Is CAS good or bad? Don't simply say CAS is good or bad. It's a new market mechanism with intended benefits, but traders also need to understand its practical effects. The goal is better price discovery, but during the early period after implementation, market participations have reported unusual end of the day volatility and differences between major indices. So beginners should avoid assuming that a sudden move near the closing automatically means something is fundamentally wrong with the company. The market is still adjusting to the new mechanism. And chapter 9. Disadvantages or risks. Now let's understand the possible disadvantages. First, more confusion for beginners. The new timings and auctions prices can be confusing. Second, closing price can move suddenly. If buy and sell orders are heavily imbalanced, the auction price can move significantly compared with the earlier market price. Third, execution is not guaranteed. Just because you place an order during CAS does not mean it will definitely execute. There needs to be matching order under the auction rules. Fourth, market orders need extra attention. Market orders are allowed during the first order entry period, but later in the section only limit orders can be entered. So traders must understand the timings before placing an order. Chapter 10. What about options and futures? This is very important. CAS is for determining the closing price of stocks in the equity cash segment. It should not be confused with the normal trading hours of the derivative segment. SEBI framework says the equity derivative segment continues until 3:40 pm. So cash market stock CAS 3:15 pm to 3:35 pm. Equity derivatives continue until 3:40 pm. So don't confuse the two. And chapter 11. Can normal investor participate? CAS is not only for big institutions. The framework is designed to provide access to different categories of investors. Eligible investor can place orders through their broker according to broker supported order types and exchange rules. But before placing an order, understand which stock is covered, what time is it a market or limit order, what is the price, what quantity are you entering. So chapter 12. CAS versus normal trading. Let's make it extremely simple. Normal continuous trading, buyers and sellers orders are continuously matched throughout the trading section. CAS orders are collected and then matched through a special auction price to determine the official closing price. So easiest way to remember it is normal trading equal to continuous matching, CAS equal to closing price auction. Chapter 13. Important beginner mistakes. Avoid these mistakes. Thinking CAS means the stock price is closed at 3:15 pm. Thinking CAS is applies to every stock. Thinking every order will be definitely execute. Assuming the closing price is guaranteed to be the same as the 3:15 pm. Confusing CAS with options trading hours. Placing an order without understanding the auction timings. And one very important point, so don't trade simply because a stock is moving sharply during the closing auction. Understand what is happening first. And chapter 14, simple example from start to finish. Let's imagine ABC Limited is an future and option eligible stock. At stock around 3:15 pm, ABC equal to 1000 rupees. The stock enters the CAS process. Buyers and sellers submit eligible orders. The exchange collects these orders. Suppose the auction determines equilibrium price equal to 1008 rupees. The eligible orders are matched according to auction rules. Then 1008 becomes the official closing price. So you may see 3:15 pm price equal to 1000 but official closing price 1008. That's possible. The closing price is determined through the CAS process. And final summary, let's quickly revise. CAS means closing auction section. It is a new closing price mechanism introduced by SEBI in the equity cash segment. It started from August 3, 2026. Initially, it applies to cash market stocks with available derivative contracts. The CAS section runs from 3:15 pm to 3:35 pm. Orders are collected and matched through an auction. The resulting price becomes the official closing price. The main objective is better price discovery, more transparent closing price, better execution around the close, and a closing price that better reflects collective market interest. But remember, CAS does not guarantee a particular execution price, and CAS does not mean every stock suddenly follows the same closing mechanism. So the next time you hear the CAS is active in the stock market, you now know what it means. CAS is simply a closing auction section designed to determine the official closing price through an auction mechanism. So if you found this video useful, please like, share and subscribe to Keshwa Money Talks, and thank you for watching. I will see you in the next video. Jai Hind.